I'm Laurie Hughes with the Bluefield Group at Keller Williams, and I'm here today with Dan Michaud at the Daniel Mortgage Group of Network Funding. And today our topic is going to be some pitfalls for buyers to avoid. So Dan, what are some pitfalls that buyers could avoid when buying a house?
I think that's a great question. One of the main pitfalls has to do with credit and making sure that the buyer isn't doing things that jeopardize their credit between the time they apply for the mortgage and when they actually have to go to the closing table. And also, there are things often that can be done to help improve their position from a standpoint of getting credit scores up. A lot of times we can take advantage of that time while they're out looking for a house to make sure that credit scores are going in the right direction as well. So one of the main things that we look for when it comes to credit is we look for credit cards that might be high on the balance in relationship to the available limit on that card. A lot of people think that it's only large credit cards that can have that effect. But in fact, if you've got a credit card with a $500 limit and you've got a balance of $400 on there, that actually may have a negative impact on your scores every time that creditor reports to the credit bureaus. So we want to make sure that we communicate that information so that if there's enough time, a borrower could potentially pay down that credit card and we can get a rescore or pull an updated credit report to reflect some better credit scores that will help them when it comes to actually locking in a rate and qualifying for that mortgage. On the flip side, sometimes there's things like collections that we can deal with or other inaccuracies on the credit report that mortgage lenders are looking for that we can help to straighten out between then and closing.
Okay, now usually I have buyers that come to me and the first thing they say is, can you find me a lender that has a great rate? Talk about how rate might factor into this whole process.
Sure. Rate is one factor. Asking what the interest rate is on a mortgage is kind of like asking how much a house cost. So there's a lot of factors that go into that. Just like how much does a house cost, it depends on the location of the house, depends on how many bedrooms, how many baths, the size of the house, the area that the house is in, the school district. So as you can tell, there's a lot of different factors. Same with mortgages. When it comes to a mortgage, a lot depends on the credit score. A lot also depends on the type of loan that a customer needs, how much of a down payment they're putting down, the customer's position as far as from an employment position can affect things. So there's quite a few factors. So until a loan officer has a good grasp of the whole situation, it's really hard for them to give an accurate estimate of a rate. So if a customer comes to me and they're just shopping rate, I like to help them understand that there's more to it than just me spitting out a rate real quickly, because it's really a disservice. They could potentially get a better rate if I know more of their information about their situation.
So another thing that usually happens is people go, they still don't understand that whole process, so they go rate shopping, right? Mm-hmm. And they call all kinds of lenders and banks, and they think they've got the lowest rate in town, and I'm going to go with this bank or lender because this was so low of a rate, I can't pass this up. We had something like that happen.
We did.
Not too long ago. I referred you a client, and he initially talked to you, is that right?
That's right.
And then for some reason he decided that he was going to go check out the rates at the bank, and he found some phenomenal rate. Tell us about that. What happened?
Yeah, he had a very complex situation. He was moving here from out of state, and there were a lot of complexities to his situation. I asked a lot of questions so that I could accurately quote him a rate based on that situation. Unfortunately, the rate for his scenario was not a rate for somebody that didn't have those complexities in his situation. So I gave him my rate, and he was hearing from another lender a much lower rate.
Right.
When in fact the other lender wasn't really asking all the right questions. And the problem was that when he got far into the process, loan went to underwriting, the underwriters saw that the scenario wasn't what it had been presented by the customer. It wasn't that the customer was misleading them. It was that the wrong questions were asked or the right questions weren't asked. And so as a result, they weren't able to close the loan, and the customer ended up coming back to me. We ended up closing on a rate, which was what I told him up front, and but they got the house that they wanted. So rate is great. However, if you're promised a really low rate and it can't close, it doesn't do you a whole lot of good because you can't have that house.
Well, yeah, and not only that, it can actually cost the customer a lot of money, because if you have gone and spent money on inspections, let's say $500, right? And then you also spent $500 on an appraisal, so there's $1,000 minimum, right? and then the lender says, oh, I'm really sorry, I can't close this loan. And then you're under a deadline, like you were able to do it quickly. That was the other miraculous thing. But had you not been able to, we could have lost that contract and he would have lost that $1,000. Right? So it can cost the customer a lot of money by not checking, just by shopping rate and not having somebody that's a lender that's, solid that can always pull through. And just talking about what you and I have done, we were talking about this earlier, 50 to 100 transactions we've done in the last few years, and you've never had one yet that you've pre-qualified that you didn't do the loan for me.
Well, I appreciate you saying that, Laurie. It's a lot of hard work that you and I both have to do on every deal, and I think when it comes right down to it, using a lender, and there are plenty of good lenders out there, but using a lender that your agent has worked with in the past and has a relationship with, and there's an accountability there, is a huge value. And do you want to jeopardize your closing for maybe 1/8 of a point in rate if that's the case? So while rate is important, and I like a low interest rate on my mortgage just like everybody else does, I think the bigger factor is, are you working with somebody that knows what they're doing, that's asking all the right questions, or that is just trying to get your business by promising a low rate that they may or may not be able to close on?
Right, so just capitalizing on that, usually when I hold a pre-qualification letter from you for a client, I usually tell the other agent, if you've got a pre-qual from Dan Michaud, you can pretty much take it to the bank. So anyway, just based on your track record,
Well, it's something I take seriously. I love the idea of going to a closing with a first-time buyer or a buyer that's buying their second or third home, and actually being at that closing table with them, and seeing how happy they are when the process is through, and that we've accomplished the goal. So it takes a lot of work. We have a good operations staff behind us at the Dana Mortgage Group, and they are what make us able to do what we do at the closing table. So it's a lot of fun. We enjoy it. I've enjoyed the closings that we've had together, and look forward to serving a lot more clients in the future.
Thanks, Dan, for being here today and talking to us about rate, as well as some pitfalls that buyers could avoid when buying a house. And if there are any other topics that you would like to see discussed, or you have any questions, please don't hesitate to reach out to us, and we will see you next time.